Well, America spends about $800 billion on software. By the way, we're also very big in Britain and a number of other countries. So, to use a term I hate that financial people love, total addressable market, is probably north of $900 billion. And we believe we have the single most important components for adaptive warfare against a large adversary that's willing to allow their troops to die. So exactly what you saw in the Ukraine, and that the percentage of the 900 billion that we would be able to capture is obviously very large.
Hey everyone, Coach Investor back to our video for today. So let's talk about Palantir. Every time Alex Karp goes and has an interview, there are some interesting topics we can talk about. Now, I did talk about the $900 billion total addressable market. To be honest, I don't know how much of that market Palantir might be able to take. Could be 5%, could be 10%, could be more, could be less. Depending on that number, you could model maybe how much a share would be worth in the coming years. It really depends on what numbers you are plugging in there. Palantir Vision did a good video about that. If you want to watch that, go check it out after this video. Now in this video, we're going to talk about Palantir, the investment case, because a year ago when the company went public, of course, it was super hyped up. Not just in the financial markets, but especially on YouTube. It comes to no surprise that no big channel is covering Palantir today. Why is that? Is it because the stock is down 60% year to date? Is it because the stock is down more than 80% or something like that since its all-time highs? Do they want to cover their tracks? Who knows? But I do think that Palantir today at close to $14 billion in market cap. Now, of course, the price of the stock doesn't really matter. It's close to $7, but just because it's close to $7 doesn't make it cheap. A stock that is at $100, $200 might also be cheap. Keep that in mind because I've seen it over and over again in the comments. Oh, this stock is just $5. This stock is just $4. So it's automatically cheap. No, it doesn't work like that. Now, there are some things, some positives, some negatives we have to talk about Palantir, so we're going to discuss all of that in this video. If you enjoy this type of videos, leave it a thumbs up. Subscribe if you have not. Let's try and end this here on a strong note. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to follow.com/couchinvestor and make sure to check out all the other links in the pinned comment. So, Palantir, the potential is immense. Of course, there are some risks. They have to execute. And to be honest, they are not such a great salesperson. They are great at building software. They admit it themselves, but they need to be even better at sales. Now, if you build great software, usually what happens is that, well, the company that use it and see great results will talk about it, and just word to mouth, the success will follow. Now, if we look at the financial metrics right here, right? Total revenue has been growing quarter over quarter, year over year. That's fine. Gross profit has been growing great as well. It's also free cash flow positive, although that has declined a little bit, well, slowed down a little bit lately. We'll have to keep an eye on that. If we see a reacceleration, great. If we see it slow down even more, question marks. And of course, when you talk about Palantir, every time you have this, well, argument that this company, you cannot invest in it because, well, stock-based compensation keeps going up. It's extremely big and hurting investors. While this might have been true 1 year ago, today, as you can see here, and as I will show you in the report, it has been declining quarter over quarter. It has also been declining while every other metric has gone up, which is exactly what you want to see. Of course, that does not mean that I'm happy with the current situation. No, it means that I'm happy where we're going. Stock-based compensation goes down, profits go up. Great to see. And now comes the question of valuation, right? If we look at the PE ratio, it doesn't really make any sense right now. It's extremely high. They are barely profitable. So this metric will make sense once the business is a bit more mature. Of course, they'll say, oh, but this business has been here for 17, 18 years already. Why isn't it profitable? Today's Palantir is not the Palantir of 10 years ago or even 5 years ago. Just keep that in mind. But if you look at, let's say, price to sales ratio in the next 12 months, I'll be more than happy to pay the 6.8 times today than the 26 times it was a couple of months ago or even a year ago. Now, that said, if, let's say, by some miracle, the stock goes from $7 to $25 in the next 6 to 12 months or something like that, and the company, the business itself, does not 6x or 5x, it would make 0 sense to be buying the stock. It would actually make a lot of sense to cut and take profits. Just keep that in mind once we go back into a full bull cycle. I don't know when that will happen, but it will happen at some point. And even Alex Karp said so.
And by the way, I would also say Palantir has always been over and undervalued, and clearly we're undervalued, but at some point we'll be overvalued again.
So keep that in mind next time the stock is flying high, and I'll make sure to remind myself and you, the viewer, as well. Now, when it comes to the commercial side of the business, because of course we can talk about Palantir and the government side, and you could have made the case, and you can probably still make the case, that without the government, Palantir would have failed years ago. And that's probably true. Now, if you look at the commercial side, it has been growing quite nicely in the past quarter. Q3 only grew 17%. Now, listening to what Alex Karp has been saying, looking at the customers that have been using Foundry, you would expect that number to increase in the coming quarters. Something to keep an eye on. Of course, you would like to see the commercial side grow. Now in the US, it's a completely different story. You have seen triple-digit growth quarter over quarter. Now in Q3, you saw 53% growth, but that's a 53% year-over-year growth over 103%, which to me is acceptable. Of course, you do not want that number to decline further and further down the line. Now, overall, the US commercial percentage as overall revenue has gone from 11 to 18%. Very big deal, especially if your investment thesis is that, well, the commercial side of the business will take the majority of the revenue, which should happen if we listen to what Alex Karp had to say.
Well, what we see is that the most important market in the world, the US of A, is also the most adaptive market in the world. Our commercial offering is flying off the shelf. We grew in the last 12 months 102% in the US. America adapts, and will in the end buy the single best products on the market. That's why we're succeeding, despite the fact that we're new to this game and by building out a commercial sales force and doing all sorts of things normal companies are doing. Communicating with normal, otherwise adult people is not something we're particularly adept at. But we are very good at building software. The same software use cases that you have in government can be applied to America.
Now, on the flip side, if you look at government, that has seen some reacceleration from Q2 to Q3, has grown 26% year over year. Now, government trailing 12 months revenue per customer has come down from 10 to 9%. Again, with everything that's been happening around the world, you would like to see that segment grow faster as well, because sadly, it's the perfect environment for a company like Palantir to attract more customers. And now lastly, to reaffirm my point about stock-based compensation. As you can clearly see here, we went from stock-based compensation back in Q3 2021, 14.8 million. Now Q3 2022, 10.5. While gross profit went from 305.3 million to 370.2 million. So you see my case here, stock-based compensation goes down, gross profit goes up. Of course, you would like to see this continue over time, not suddenly switch and make a U-turn and stock-based compensation goes up, gross profit goes down. So to conclude, yes, I do think that in my opinion, for me, it makes sense to be invested in Palantir today, because I do think that the market is giving me an opportunity to buy into a great company. Whether you like Alex Karp or not, I do think that he's crucial for this company's success. And when you listen to how American he is, pro-America is, you cannot just say, oh, he's wrong. No, he's right. America first if you're a US-based company. It makes no sense to help others and then put America, especially the Department of Defense, second. It just doesn't make any sense. And so to end this video, of course, it hurts that Palantir is down 60% year to date. But if you think of it in the long term, if you have a long-term vision, and if you trust the Palantir story, then to me, it's a great opportunity today. Of course, everybody has another opinion on the company and especially on Alex Karp. That's totally fine, but here I'm sharing mine and I'll keep on covering this company. Doesn't matter if it's down another 60% or if we're suddenly up 100%. Just keep in mind that when everything is down, suddenly some big channels out there are cutting their coverage on a specific company. So keep that in mind whenever a company suddenly is soaring. that's about it. Obviously, do share your thoughts down in the comments below. Are you a Palantir holder? What are your thoughts on the company's future? Leave it down in the comments below. And if you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I see you all in the next one. Bye bye.